so it's Thursday. We get natural gas EIA numbers at 10:30 a.m. Eastern Time. We'll jump over here to the NADEX platform. I was jumping around playing with these prior during our commercial break. Here is the natural gas contract. We're looking at September. Got a little bit of volatility this morning already, spiking
3 cents, right?
Yeah, 270. Is it 278? 277.8 we got to. We're back down to just above 275. So what we're going to look at here is setting up potentially a volatility trade with bullish and bearish exposure, right? So I'm going to minimize that for a moment. I pulled up initially the 11 a.m. expiration spreads, all right? So we have, what's nice here is that natural gas trading, and as we even speak, navigating right back to that 275 price point. And we're going to have the ability to buy a bullish spread, which begins at 275 up to 295. That one we're going to be paying about $8, all right? We're slightly out of the money there. No, we are in the money, excuse me. Yep. And we have barely some intrinsic value. And what's nice on the flip side, vice versa, because this contract is right at 275. Here's our bearish spread. It's going to be very similar to the 8, except this one costs us 7 because we're slightly out of the money versus being slightly in the money. So you're talking about only $15, and this is where, if you follow the program, you've watched these as we do them every week for oil on Wednesdays, natural gas. It's always nice when it lines up where the indicative, the underneath, the underlying, whether it's natural gas, crude oil, is right where these line up. So you can see on the 11s,
it's only a penny and a half.
A penny and a half. So you need either 276.5 or 273.5.
And we've had 3 penny moves so far.
Yeah,
today.
We already had one up and down today. So those are the 11 a.m.s. Let's see how the noons price out with that in mind. So the noons have exact same pricing structure, which is nice. 275 again. Here would be our bullish spread. This one now costing you $10. You're gaining that extra hour.
Yeah.
And on the flip side, 10 and 8 instead of 7 and 8, right?
Wow.
Yeah, so you're talking about $18. Throw in some commissions. You need 2 pennies.
Right.
And you have till noon from 275, 273, or 277. 2 pennies on either side becomes your break even. And that number comes out at 10:30. And we'll see what happens. I jumped to the reason why I didn't bring up the 230s. They don't line up as well. You'd have to be at 280 there to have the ability to trade that. Now, just jumping around in terms of, again, huge action, you can always, this is like right in the middle of the market in terms of just having a directional play, buying it basically at future. They have, this is a 40-cent natural gas spread when you go into the dailies.
Right.
So it's basically like a futures contract because you have exposure. Realistically, 15 cents down, which is a realistic amount that, as in, it's going to encompass any daily move.
Right.
So it's a futures contract until 2:30 that you're getting in basically right at market. We're trading at 275.1.
That's pretty cool.
And it's, bid offer spread right around there.
Because if you're trading the futures, folks, there's no way you'd want to trade the futures when you can buy it at the exact same price. If you're day trading the futures, that is, okay? And because
you're talking about
it's a replacement,
and you're talking about the defined risk, exactly, leading up to an inventory number that's probably going to jump this around one way or the other in literally 5 minutes from right now.
So let's go look at that contract. Let's see what we got here. So September contract we're dealing with, right? So let's see what we got here. Natural gas are
So that's August in there, I believe, and that's just the slight difference.
Okay. So
they haven't quite rolled the automated Bloomberg.
Boy, this was quite a downdraft. Holy cow.
Talk to our man Jason Paff. I know you talked to him Thursday afternoons. You'll have to talk to him about whatever we see happening in 5 minutes with those numbers because as he was talking about it, man, it is just a tough market right now for natural gas.
Look at that. Yeah, this is a one-way trade. $3 right down. Last week we hit that 274.
Yes.
And we get some volume there, man. Okay, you're going to get some volatility. It looks like we're going to get some volatility. And folks, if you haven't test-driven yet the NADEX platform, just get out there, hit the banner at TFNN, bring it up so you can get used to how these spreads work. Because the volatility, what you also have. Now, last night at the close, we were talking about volatility, and yesterday morning we were talking about you had a chance to do a volatility trade inside the NDX 100 at the close yesterday because the futures closed at 4:15.
Sure.
Facebook was coming out. But what did happen is this. I wanted to go do one, and I went over there, and what happened, folks, is this. Is that because Trump made a deal with the Europeans right into the close, what happened when the market went up, there was nothing, they were all out of the money.
Okay, so there was some,
You know,
Yeah.
so you got to keep that in mind. That's another reason to have that demo. Now
Yes.
today, the same thing will happen. Well, I don't know, meaning you may be able to do it with Amazon.
Yeah, we're going to get Amazon earnings right after the bell.
Right.
That's going to move the markets before the 4:15 close of the futures. Which
And it
trade
moved.
on that.
You know, the NDX. If the contracts were there, if it hadn't moved so much, they went down $54, 54 points.
Yeah.
So it was there.
It was huge.
Stay right there, folks. Tommy and I come right back. We get the Dow up 130, NASDAQ's down 72, S&Ps are down 1. Come right back. Welcome back, folks. We have the Dow up 115, NASDAQ's down 72, S&Ps are off 2.5. Natural gas, what do we have here?
There we go. So we have natural gas stockpiles rising 24 billion cubic feet. We'll get the estimates in a moment, but to jump back to the chart and see how we're reacting. So you have natural gas spiking higher. We were give or take right at 275, right? We're spiking, call it 277 currently.
Okay.
So immediately, if you had, we'll jump back to the noon trades, as in noon expiration. Remember, we needed somewhere between about a penny and a half and 2 pennies of movement, and now we're already over 2 pennies of movement away. Your value there would be in the bullish spread from 275 up to 295, and there's your bullish spread. And if you'd be, you know, selling out of that right now, you have about $20 in value, give or take. So that would be you're at break even, as we talked about.
Yep.
On the noon, it was a little bit less on the 11s. You'd be in a profitable position, but a little bit of spike. It's what you'd like to see if you'd made a volatility trade initially, and I'm not sure exactly what the estimate was on the numbers. We'll pull it back. So there we go. So we had a rise of 24. They were looking for more oil than that. They were looking for a stockpile rise of 35 billion cubic feet. And to jump into some of that data across the board, across where it's spread out, East, Midwest, Mountain Pacific, South Central, all of them showing a build. Is that correct? Yeah, all of them showing a build. I guess they break it down week by week. But regardless, 24 billion cubic feet, I believe that's when you add all of those up. That's what we're reaching.
Yeah. So it'll be interesting. So we're at, what, July 26th, right?
Correct.
I wonder how long this build goes on for, like what the market expects, whether it's like into August, and I guess it depends when it starts getting colder up north, right, on the Midwest.
Yeah.
So
we'll check back in a couple minutes after the news, but natural gas hanging above 277.
And that, you know, and what does happen there, folks, is that, and that's what, you know, the closer it is right to that number, the more probability I think those trades are, meaning that you're not paying for the intrinsic value, right?
Right. So, for instance, that trade we're looking at, when you have natural gas trading at 275, and you have the spreads going from 275 to 295 and 275 to 255, you're not paying for any intrinsic value, and that's where it just keeps your costs down.
Right.
Because you don't want to be paying for intrinsic value if you're making a volatility play where you just want a pop one way or the other.
Right.
Because any amount you're paying in intrinsic value too, the trade begins to lean that way.
Yes.
Right? You know, when you pay it to the bullish side, well, if you want to make a profit and you go negative, you have to make up that plus whatever.
Yeah, you're making a decision, bullish or bearish versus volatility.
Yeah,
basically.
it's taking on a little bit of a head start in that direction.
Welcome back, folks. We have the Dow Industrials right now up 152, NASDAQ's down 64, S&Ps are up 1.5. Gold's down 560. We got King Dollar up 291, and
natural gas. One more check.
Yeah.
Rounding out the almost 11 a.m. and 277.15. So just above 277. Not bad, as in that's where it's nice. It works out. We're trading right at 275. You needed about 2 pennies to begin to break even.
That was including commissions.
On the noon. Right. It was $18 total.
Right.
But if you're adding $1 per, if you want, 2 pennies get you fully there, and we're above that level currently. And you have over a full hour left for those noons. So you can let both sides of it ride, as in that way if you catch any exposure, you could always close out the bullish trade, lock in your break even, and look for a decline or see what happens. But decent move.
Let's go. I want to just look at oil from yesterday.
Oh, boy.
Yeah, exactly. Do you know what I mean? Because what happened is that, we had that volatility out there.
I like the natural gas trade, but it is not keeping up, in my opinion, with what the oil trade has been given out on Wednesdays.
Seriously, look at this. So there it is. Oh, my God.
Can I see it? I'm just going to zoom in a little bit. Let's take that.
That is intense.
So we spiked to a high of 69.37 on the news. We came back down to 68.20
at 10 minutes at 11,
and then took off.
And by noon, oh my God, look at that!
That's what.
How cool is that?
69.70.
That's pretty cool.
Prior to that number coming in, we were trading at where are we? The close of this bar, I believe it's going to be 68.88, and we end up closing out the noon. Almost
90
$1
cents.
higher, right? Yeah, let alone those lows, right?
Big number.
Big number.
Big number. And of course, stay right there, folks. We got Fast Market coming up with TD Ameritrade. Then we'll go into our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon with those Amazon numbers. Thanks, pal.
Amazon taking over the world.
Amazon taking over the world. We'll see if that falls apart or it goes with Facebook.
I don't expect. This is my market bias, but I don't expect Amazon to be falling apart 20% this afternoon.
Yeah, seriously, 18%. Stay right there, folks. Fast Market's coming up next. Have a great one. Have a safe one. Go get them, folks.